How's it going, everyone? Matt Diamond with Kalshi, and today we're going to talk strategy, how to trade breakdowns on the S&P 500 and the NASDAQ 100 daily contracts. I did a video not that long ago talking about how to trade breakouts. This is going to be the opposite. This is going to be a breakdown. So when the market is moving to the downside. And I think this is going to be a pretty good example because recently there has been some market weakness. Now let's talk about what a breakdown is as far as the technical definition. A breakdown is a downward move in a security's price, usually through an identified level of support that portends further declines. A breakdown commonly occurs on heavy volume, and the subsequent move lower tends to be quick in duration and severe in magnitude. A breakdown can be identified by traders using technical tools such as moving averages, trend lines, and chart patterns. And the chart that I have in front of you, this is the S&P 500 daily chart. And what we're going to do is look for support breaks. Now, it's easy to kind of overanalyze this, but I'm going to try to keep it very simple. We're going to start all the way to the left, and we're just going to look at an area of support that ended up breaking down. So I'm going to keep this super simple. Here is a line of support that I see. It kind of bounced at this area, had a big push, came back down to it, and then it broke below it. So this would be the breakdown right here. They're all going to look slightly different, but the concept is that there is an area of support that ends up breaking, it doesn't hold, and it has that aggressive move to the downside. So now let's go structure the trade. And these numbers are going to be slightly off because this happened a long time ago. These ranges are going to be up to date with what's going on right now, but we'll still use that to structure the trade accordingly. So going back to that first example, the breakdown happened, call it right around 3,900. So 3,900 is a major area of support. We believe that that support is going to break and there's going to be a move to the downside. So what we would want to do is trade the yes contracts in those lower ranges, because if it does break down, then there is the likely probability that it's going to close in those lower ranges. Now let's do another example. So just trying to keep this very simple. Here is another area that I see, big support, held that numerous times. And then what happened? Once it broke below it, stayed below that, there was a quick move to the downside. Not every single move is going to be really big, but just knowing that it breaks support and then it has that move lower pretty quickly. So now to structure the actual trade, and this breakdown happened right around 3,900 again. So what we would do is go into the back end of Kalshi, pull up the S&P 500 daily bracket, and then we would look at those ranges that are going to be just below that 3,900. And what we would want to do is trade the yes shares to the downside, because if it does break that 3,900 and it's a successful breakdown, there is a high probability that it will close in those lower ranges. And now let's do one more example, one that happened recently. So looking to the far right, this is the price action that's happened within the last couple weeks, and there was some market weakness. So let's try to keep this very simple. Looking at a pretty big area of support, kind of traded sideways. It's not going to be perfect, but we get the idea that it was going sideways right around this 44.50 level. That was a pretty big area of support. And then once it broke below that, look how aggressive this move was to the downside, and it happened pretty quickly. So now to structure the actual trade, going on the back end of Kalshi, the S&P 500 daily bracket, we know that that level was right around that 44.50. And if it loses that support, which it did, we believe that there is a likely probability it's going to go down, have that breakdown, the bearish move. So what we would want to do is focus on the ranges that are below that 44.50, and we'd want to trade the yes shares to the downside. Because if the breakdown happens and we do get that bearish move, there is the likely probability that it closes in those lower ranges. So those are some good examples on the S&P 500 daily chart. Now let's go through some more examples on the NASDAQ 100. So the very first example, far left, look at this area of support, held it a couple times, and once it lost that support, there was an aggressive move to the downside or a breakdown. And now let's go structure the trade, and these ranges are going to be slightly off because this breakdown happened a while ago, but we'll still use that to play it out. So if we're looking at this breakdown, it happened right around 12,000 to 11,900. So what we would want to do is make sure that we're going to trade those ranges to the downside, because if it does successfully break down, there's the likelihood that it's going to close in those ranges lower. So we would want to trade the yes shares to the downside, because if it does successfully break down, it's going to see those lower prices. Now let's go over another example, just trying to keep it very simple, looking at an area of support where price touched a lot, and then once it officially breaks that support, has that move lower. And here's a really good example. Look at all the times that price came to that level of support, eventually broke it, and had an aggressive move to the downside or a breakdown. Now let's go structure the trade. So knowing that that breakdown happened right around 11,500, what we would want to do, go into the NASDAQ 100 daily bracket, and we would want to look at that 11,500 and a couple of the ranges lower. and then trade the yes shares to the downside, because if it does successfully have that breakdown, then there's the likelihood that it's going to close in those lower ranges and see the lower prices. And now let's do one more example on the NASDAQ 100, and we'll do more of a recent breakdown. So looking at the far right, this is price action that's happened within the last week. Pretty quick area of consolidation right around that 15,000. So you can see that 15,000 was an area of support. And then what happened? Support ended up breaking. It could not hold, and it had a very quick move to the downside. So now to structure that trade, we would go into the back end, the NASDAQ 100 daily bracket, and knowing that that breakdown happened right around 15,000, we would be looking at all the ranges that are just below that. We don't want to go too far below, but the first few I think would be pretty good, and then trading the yes shares to the downside, because if it does successfully break down, there is the likely probability that it closes in those lower ranges on the daily chart. So those are some great examples on how to trade breakdowns if there's weakness in the market and expecting a possible bearish move when support breaks, trading those daily contracts on the NASDAQ 100 and the S&P 500 on Kalshi. So that's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.